Hey there, Russell Traders. David here of TradingFibs.com to bring you the daily recap for May 31st, 2013, the last day of the trading month, as we enter into June next week on contract expiration. Looking at today's four major indices, you can see similar patterns, a lot of chop inside the range, a couple of buying opportunities that came above the 25-minute open range that would have been tempting. And had you followed market internals, you could have avoided a trade. Not to say you could have gotten several ticks out of it, but it was not a momentum drive as we see. The best entry of the day really occurred in the last hour and a half on the ES, the YM at about an hour and 10 to go, and 10 minutes to go on the NASDAQ, and really the last trade with 5 minutes to go on the Russell. Not exactly my time of day that I like to trade with 5 minutes to go in the market, but if an opportunity exists and you're ready to take it, you go for it as long as the setup is there. Looking at additional markets, our four indices up here, our 25-minute open range set up on crude, soybeans, as well as Apple drop within the last 20 minutes. Again, traders, if you don't trade any of these equities or you don't trade any futures, whichever market you do trade, the rules still apply. They're still the same. Throw up a 25-minute open range is to start using exponential moving averages, Heikin-Ashi candles as I do, and using daily gap and any pivot line of your choice for targets. Include my Fibonacci levels. Could make for a good trading day. As you can see here on market internals, we really were in the red most of the day. Really never came up on the tick above zero. So bias to me for most of the day was to the short. We started out short. We had some buying up here in the first 15 minutes, really settling down at the top of the open range to eventually follow suit on the AD line. We started out with a negative 1715. Coming up to about negative 409, but really never got higher throughout the day and then sold off. As well as the market breadth really flattened for the day, 1-to-1 ratios, not very strong, and then eventually started to decline. As you can see on our 15-minute range, we really stuck within the action. If we take a look at the entire week, Monday was a holiday, so we didn't have a lot of trading day there. Several opportunities existed throughout the week. Coming in on Tuesday, a nice market open, selling off and down and out. Sell off down here below 25-minute open range made for a nice entry. Thursday was pretty much inside the open range with no trade day for me, and really the only trade opportunity that was a good one was down with 5 minutes to go. One of the things I've been looking at is with these wide open ranges, anything that has perhaps an 80 or above tick range, I'll be looking at using my exponential moving average to trade within the range in the weeks to come and see if there's any indicators that help me doing that. I don't call them missed opportunities, but if such wide open ranges occur, you'll see there's not much momentum outside of them. It's on the days when we have our smaller open ranges with maybe 20 or 30 ticks, you can use more of an opportunity for momentum above or below. So looking at the advanced decliners, the AD lines throughout the week, starting out very low, rising, and just falling off on Tuesday and Wednesday and Thursday and Friday. So a lot of sideways action with a little bit of sell-off at the end of the week. So how do I put this all together? Using the market internals and using my 4 screens here. Again, upper left is my 25-minute open range. I sit out the first 30 minutes and I wait for the entry above or below the range. I just simply plot my weekly pivots and my monthly pivot lines for targets or levels of resistance. My right-hand side here, I have my Heikin-Ashi candles, which I base my trades on, including where is the momentum drive. I'll show you in a couple minutes here. And the lower left here, where I have the daily pivot standards and Camarilla pivot lines, which tend to hold up quite often. And then using the post 1 hour open range, as you'll see today, looking for why did price come down to there? Well, exactly for that reason. There was a level of support or resistance there. The 25-minute open range is what I was waiting for here today. Market internals were biased to the short, as we saw in the first candle. Market internals. There we go. So first bar, even though you had a nice spring in it, coming up here with some buying, really in the first 15 minutes settled below the zero, so it had the bias to the short. So market internals was to the short, but all this buying up here told me to wait it out for this 25-minute open range to open up. There was no chasing the gap for me. Gap traders were able to close the gap. So here we are with the buying settling back in within the range. The first opportunity came here, which I'll go over why this was a potential trade and why you would have chosen to sat out. A lot of sideways action between the gap and the pivot here, which is with this in between the 25-minute open range high and this section here, as we can see on, here we go. So here we are, daily gap. So price came up to the daily gap line at 993, and then came back down, found support here at a double line of resistance on the way down. This was the daily S1 and the daily, this was a Camarilla H4, so L4, excuse me, L4. So L4 and daily S1 chopped it up inside the range, and then again came up to the daily gap, and most of the action here between the daily gap and the pivot. Price came back down through the range. I'm going to talk about why I'm looking at this as a potential trade in the future, especially with 80 tick ranges or 80 plus tick ranges. Price came down right here to 984.2, and you ask yourself, well, why did it stop there? Well, taking a look at my 1 hour open range, boom, right there. 984.2. I had a line of resistance on the way down. Price came back up, so that could have been a potential target if you were in this short. And why would I have been in that short? Well, taking a look here, this was your 984.2, which price came back up, and this is what I'm looking at as we have these wide ranges. This is a nice healthy trade based on EMA crossover with solid red tails coming down, Heikin Ashi following suit. And then you look back and say, well, that's starting to look like a good trade. Well, there's no exponential moving crossover until here, which is not the same as we're looking at here. So this is something I'll be looking at in the videos in the coming week and taking some trades on if we open up with these wider ranges. Throwing up a Fibonacci extension. Price came all the way down to the close, past the cash close at 109 here, 409 Eastern Standard Time, and the entry under the 25-minute open range would have had you set a first target at 982. Again, my method is not necessarily which target to choose. That's your own management style. It's where's the momentum drive, and that's what I share in my trading room. The momentum is there. The market internals are matched. Then you get in, you manage your stop, you manage your targets, depending on what you use. If you don't know how to use Fibonacci extensions, then you don't use them. You use daily resistance, support lines, depending on the trend, and you follow suit. And you take contracts off on the way down and move your stop. So by all technical means, this was really the best entry of the day based on my trading method. This was 5 minutes to go. Not many people like to trade within the last 5 minutes. I don't typically like to trade the last hour of the day, but if I've been sitting around all day and everything's selling off and I see market internals following suit, I will take it. Some of you like trading in the first 30 minutes. I find a lot of choppy action sometimes there, but again, a lot of buying here. This action here on the blue Heikin Ashi candles is very similar to the selling off here within the range. So a combination of both, depending on your preference. And again, overnight prior, if you were an overnight trader, you would have seen the market just take you all the way down here. This was a nice healthy drop from 992 to 981. So let's take a look at the whys and how we would have avoided this trade above the 25-minute open range, where there were several opportunities where we broke above. First thing I need to look at is market internals are still mostly red for the day. I have red on the market breadth, I have red on advancers, decliners, I have red on the tick with some upticks which showed green, but green and red, that's hands off to me. That's showing that we have mixed market internals. So if we take a look at these several opportunities that existed above the 25-minute open range, not to say you couldn't grab a couple ticks. First opportunity with a close above the open range here at 993 was this long bar at 805 with a lot of buying. Technically, that is not a bar that I would look at as far as an entry above. I would like to see at least 75% of this bar above the range. And so my first bar that I'm really looking at here is an 810. Now this 810 bar that I'm right here has a nice long tail up followed by a nice red candle with a long tail up. This is called price tried to get up here and just wasn't able to maintain it. So an 810 bar following on a Heikin Ashi, my first bar that has that opportunity is going to be right over here. This bar at 809 is still underneath the 1 hour upper range. This green line here, this solid green line with dots, is not even 50% over, almost 50% over. So the first actual bar that I would consider even getting into a trade above the open range would have been this bar at 815. So matching this bar here, let's do this. Let's open these up side to side so this makes a little bit more sense. Should be able to pop this out. There we go. And let's close that one out. There we go. All right. So looking side to side here, my first bar here at 810, my first bar here at 815. The second bar at 815, long tail up, red, not a very positive sign of action continuing. Now you could have followed suit on, you could have said, all right, entry on this bar, and then I'm going to ride it up, take some ticks off along the way, put my stop at the 25-minute open range, and I would have been taken out. Nothing wrong with that. I tend to like to go with a longer trend. So following my 815 bar in Heikin Ashi, this is all buy, and buying signal. My first next bar after this close above the 25-minute open range, indecisive candle, red Heikin Ashi candle, and as you can see, we just followed right back into the range. So this would have been a trade that you would have want to avoid. And so again, here at 835, we had another bar close above, and you can see that every time that price action did move above nicely, followed by a red bar on the 5-minute bar, but indecisive buying on the second Heikin Ashi bar, which this is not a bar that shows some buying up. And with market internals in the red, I didn't see this going any further to the upside. And as you can see, pretty much all day we just went ahead and followed suit all the way down. All right, so that is a recap for May 31st. For the Russell, again, following suit on the other opportunities of the day on the indices was the same similar setup. Market action took place underneath the 25-minute open range really at the end of the day, even though the opportunity existed in the beginning of the day. And that's why you would have avoided, not that you couldn't gotten any ticks out of this, but that is something you would have not gotten into based on your market internals just really being in the red for most of the day. So not a bad day to finish off the week, but only occurred in the last 5 minutes. One additional thing we could have thrown up as well which I didn't show you here, question was where could have been the possible potential at least first target. So if we had thrown up a Fibonacci target, we really did stop at the 50% line, the first Fibonacci extension. So not much room to go here above the 25-minute open range. Would have liked to seen this break 994.10 for some buying long, and as you could see, really didn't go anywhere above that for the rest of the day. So anyway, that's it. If you have any questions, please feel free to email me. You can visit me at tradingfibs.com, visit my YouTube channel. I'm all over the social media. Anyway, it's easy to get in touch with me, and I look forward to seeing you guys next week. Have a good week.